Hello everybody, Royston over here. Today I want to be doing a video on the topic of short squeeze. Now, some of you might be familiar with this concept, but I believe that some of you will probably be hearing this concept for the very first time. Short squeeze is basically a situation where today, if let's say you are bearish on a particular counter and you have borrowed shares and shorted on the counter, thinking that the share price will go down and therefore you will be benefiting from your shorts. However, the reverse is true. Instead of going lower, all of a sudden the share price starts going higher. Breaks its 52-week high, and that is where the expectation for more buying momentum will come into the picture. And in this case, today, if you are facing that situation, of course, you'll be panicking and not sure exactly what to do. You will want to exit your short position so as not to incur more losses, because as the share price goes higher, your losses will start to accumulate. And that's where we have got a short squeeze effect. Now, this is a particular situation that is quite prevalent for a counter that is heavily shorted by the market, meaning that a lot of investors think that the fundamentals is crap, it's shit, and therefore borrowed shares to short it. But in the event whereby the share price starts gaining momentum, breaks its 52-week high, that is where all of these shorties will start to panic and will start to look to cover back their position, and that's called a short covering of their position. When they do that, essentially they will result in higher or even more elevated buying pressure. There's going to be more demand because they have shorted the shares in the first place. Now they need to be buying to cover back those positions, and therefore the buying demand will be extremely strong, and that will actually push the share price even higher. So that's basically what we are going to be looking out for. We are looking to find stocks that is in a similar situation like this. And based on my own experience, what I would like to do is basically to find certain stocks that is heavily shorted by the market, and at the same point of time, they also demonstrate better fundamentals. And this is basically the criteria that I am looking for in terms of screening for such counters. First up, I look out for stocks that is pretty near its 52-week high. So there is a potential that it will be able to breach its 52-week high pretty soon. In terms of short percentage, the number of outstanding float that is being shorted by the market, more than 10%. Coming to the fundamentals, I want to know that there are recent improvement in terms of its fundamentals, in terms of its earnings per share, Q-on-Q change. So I'm looking at it from a Q-on-Q perspective, quarter-on-quarter, to see that substantial momentum. Same thing with regards to sales, Q-on-Q change more than 15%. So this too basically is more on the fundamental side, illustrating that there's going to be a change in terms of some form of positive fundamental momentum for the counter. And that could be also another catalyst to trigger the share price higher. Ideally, I would like to be finding smaller cap counters because those are the ones that is more volatile, the ones that is really going to see substantial amount of short covering. If the market cap is too big, then the magnitude of that short squeeze might not be there. Therefore, ideally, I want to be looking out for counters between 1 billion to 5 billion market cap. However, having said that, it is quite restrictive on that basis. Not many shares are currently in this kind of situation. If I were to select this 1 to 5 billion, I believe that there's probably only just 2 counters that exhibits that kind of short squeeze effect. Now, if I were to relax this and not to select based on market cap screening criteria, I have a few more stocks in consideration. These are the stocks that basically are being screened out and fulfills these various criteria. So these are the ones that potentially you can be looking at in terms of consideration for your short squeeze. I've highlighted this to some of my option students previously, and myself, I've executed on 3 or 4 of them. All of it have shown pretty solid returns. Okay, so later on, I'll be using the Traders GPS to basically be identifying one of this particular counter. It is not necessary to be using your Traders GPS platform in this particular situation, but we can actually be looking at it in terms of the price chart action and see if it could actually be a good candidate to enter for this particular play. Now, I have executed some of these counters previously using options, and this is basically some of the track record. I have also highlighted them to my option students and mentioned that this is basically a higher risk play. This is speculative. Please be mindful in terms of managing your risks. You don't want to be putting in too much position for such speculative plays, especially on stocks whereby the market cap is pretty small. And my preferred way of executing is through options whereby I can limit my risk, while yet at the same point of time, if the trade actually pans out right, the returns can be quite substantial. And as you can see over here, the returns over a pretty short duration of time, I think I have only been holding them for roughly about 1 month or so. It's quite decent. So for Shake Shack, so most of you would be familiar with Shake Shack because it has got fast food chains all over the world. And this is one particular counter that I have identified previously, was looking to breach its 52-week high, have not yet been able to do it, have been consolidating for quite a while, entered into a position using options, and recently there have been strong price movement, and that resulted in close to 200% ROI for this particular counter. Pretty solid. Next up, another counter that I'm still in the trade, POWL. This even better. Returns have been roughly about 471%. So my cost was at $23 per share or $2,300 per option contract. And right now, the value of those option contract is worth $131 per share or $13,000 per option contract. So I've generated a ROI of about 470% within a single month. So pretty solid. While yet at the same point of time, I can actually manage my risk pretty tightly. I know that I'm not going to be losing more than this amount that I'm putting up. Say for example, $2,300 for an option contract, or in this case for Shake Shack, $850 for an option contract. Okay. Whereas let's say if I'm wrong, share price actually collapses big time. I'm expecting it to break out, go even higher, but it actually collapses big time. The shortest are correct, I don't lose that much. Okay, so that's the benefit of using options in this case. Now, coming back to this list of counters, which are the ones that could be looking pretty interesting, I believe that all of them are potential considerations, but some of them have already read it very, very substantially. I have positions in CORT. Okay, so another fantastic one that have actually generated pretty solid returns for me. And I have got POWL. So these are the two existing positions that I still have got in play right now for this short squeeze. Taking a look at some of the other counters over here, I'm actually looking at one counter which I might be looking to execute. I'm not sure if I can be executing using options. If I can, that'll be great. But the one that I'm looking at this point of time is FOUR, Shift for Payments. Okay, it's pretty close to its 52-week high. So let's take a look at its price chart. Let's head over to the Traders GPS platform and let's hit into the ticker FOUR, Shift for Payment. And as you can see over here, the share price have recently kind of like rallied above its 52-week high. Right now it is trying to break out more convincingly on that basis. Is it at an all-time high? Not yet. All-time high is probably around the $103 level, which is not very far away from where it is. Now, if the momentum actually continues, that will be great. Okay, so over here, I do not need to use the Traders GPS signals. There isn't a need to be basing it on green arrow with TIF or mode bullish. Usually I don't follow according to that. I will just execute if the chart's layout is good, and this is basically what I want to be looking out for, whereby it is potentially gaining momentum and looking to breach its recent high over here, and the expectation is for it to go higher. So that's basically what I'll be looking to play. and if the share price can actually continue its momentum and breach the $103 level, which is its all-time high, that is where all the shorters will again start to panic and look to cover back their position. Okay, so that's basically my gameplay for this particular counter. Now, I know that this is going to be pretty risky, and therefore I would want to be putting in a stop loss. So I can be looking at it from a medium-term perspective. So this is usually a trade which I will be putting on for roughly about 3 to 4 months in terms of time horizon. If it doesn't pan out, I'll be looking to exit. So if within that 3 to 4 months duration doesn't rally substantially, I'll be looking to exit. If it hits my stop loss, I'll be looking to exit. So over here, the stop loss that I'll be looking at, you can actually be following it based on the position daily kind of strategy, based on a PE or dynamic stop loss 2 times. Okay, 2 times. So in this case, let's say for example, today, if you are looking to put in that position, your stop loss could be somewhere around the $90 level, approximately. Okay, approximately around the $90 level. If let's say you are looking to execute this counter today at roughly about $97 per share. So you risk slightly less than $10 in this case, but potentially if that momentum is to continue, the upside could be quite substantial. And what I would always like to do for such stocks or such strategies is basically to execute using options. And as you can see previously, as I've shown, the impact if you are right when the trade actually pans out according to your expectation, wow, fantastic. Alright, ROI. And yet at the same point of time, I can manage my risk over here by making sure that the amount of premium that I pay to own this option is not substantial. And at the same point of time, I can also put in a stop loss for this. So that's basically my gameplay for this. I will update my option students in terms of how this particular trade would have panned out if let's say I execute it using options, FOUR, shift for payments. I think it is looking pretty good. But again, as I mentioned, this could be a highly risky trade, pretty volatile. So I do not know if that momentum can actually continue. But I will be looking to reduce my risk exposure through an option structure. Okay? This is a strategy that has worked out quite well of late, and that's why I want to be introducing it to the overall SMT community, and I hope that this is something that you guys would also be able to use as part of your trading arsenal. With that, thank you very much. I'll see you guys in the next video.